Good day. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Monday, the 8th of March, 2021, 5:05 p.m. Central Time. So as we look at the market, we just reopened and wow, a nice big pop in the markets. Did they overdo it today? Probably to a degree on the downside. They've really stretched out the NASDAQ break and the Dow rally. So you're getting some interesting plays here as traders have moved back into this cyclical stock. Some of the industrials makes a lot of sense, and they have been dumping the NASDAQ. Those are what? The pre-COVID and the post-COVID plays. If you think of them that way, you sort of get it. In the energy market, yesterday we had more news of an attack, as you know it, on the Saudi oil fields. I wrote about it today. It's been all over the news by the Houthis, and no damage done. There were more attacks today, but did the market overdo it? It's very possible. Did gasoline probably get up into that 212 area and really overdo it? Probably for this part of the run. But if you're reading the news, start reading about California demand for gasoline and how the people are lining up at the service stations, filling up and hitting the road. Spring fever is hitting America. In Chicago, today 65 degrees. Now, I still have snow in the front of my lawn. I live downtown in the city. You drive around, there's still piles, and yet people are out in shorts. I mean, it's pretty crazy what's going on, and we're going to be that way another day or two. If you tried to get into a driving range, forget it. They were jammed. Anyone trying, there's so much pent-up demand to do something that they were lined up for a block, trying to get their balls in a spot to hit with their drivers. Pretty interesting times we're in. Gold market still not acting well. Silver's a $25 commodity now. Copper market just churning its wheels. Dollar index continues on the assault to the upside. Why? Because interest rates got over again, 1.6 in the 10-year, and we're looking for a number. Now, where is that first number? It's probably right between here and the 175 area. It just makes sense. I mean, you've climbed an awful lot. That would be a peak number. Doesn't mean you can't go higher later on, but these things generally just don't put it all in at one point. So somewhere around here, you're going to start seeing traders say that maybe the market is overdone. Just ideas about that. We'll see what it does for the metals. When we come to a gold chart, how can you be bullish? There's nothing here to hang your hat on, and it hasn't been. You have stayed under on a weekly chart, this 18-week average of closes. I know you got to be tired of me telling you that, but that's one of the filters you look at. The other filter is you look what this market's done. And from here, it's worked its way down in very neat levels. And today was an outside day down. Now, I like outside days. And the reason is if you take out today's high on either Tuesday or Wednesday's trade, my rule of thumb, that's all that it is that will signal a bear trap and where could the market go? Well, I look at it moving averages. 1750, 670 could be the number. That number, by the way, is dropping. If you look at that 18-day average of closes, it's dropping about $10 a day. I'm giving you round figures there. So tomorrow it could be 1746, 1736. We'll see. My point is if you get over 1712, it's not hard to add another $20 to get up to that number. Does that mean the bear trend is over? Well, it might mean that this leg has run out of its momentum to the downside. Somewhere along the line it will. I am not a bottom picker. I look for signals that tell me something else is taking place, and I'm giving you what I see. Before I get too far further on this, one of the things that I have a request of you to do, and not all of you are doing it, and I'd like your help. If you're going to watch the videos, and they are free, at least hit subscribe on the bottom so you get them in a timely manner. That helps you, and it helps me. But when I put them out like I did over the weekend, I didn't send out emails to my clients, and if they had hit subscribe, they had it. You know that your Facebook's going to tell you, your YouTube's going to tell you you've got something new there. It's going to send you the notice of it. Do that, please, okay? When we take a look at the gold here, the Bollinger Band, 1660.30, so it's another $21 lower. You'd have to take out today's low, which was 1670, 330 to make a run at that. Don't know if it's got it in it or not. Depends what the dollar does. When we look at momentum, it's embedded. So until the market loses the embedded reading, I think the pros are going to sell short. Now, there's a key moving average that they look at. I can tell you, if you take out 1712 and that average is anywhere near there, and I have not looked, be careful. You don't want to see that happen. That means you can get more of a pop, even with an embedded reading. You'd have the two fighting each other. This is the strongest signal at the end of the day. This is the hierarchy signal on the charts when you get an embedded reading up or down. The gold-silver ratio, once you popped over the 18-day moving average, silver started losing to the gold, and it's still the case. Silver is very much in a lower high, lower low level, but I am expecting a fighting battle here at the 100-day average to the lower Bollinger Band. If I'm wrong, maybe you sink down to the 200-day average in gray, but I think it's right here that the battleground's going to be. In the copper market, we potentially have a pattern here of what? Well, right now you got a higher high, lower low. Which way is it going to set up a trend? I don't know. Even if you rallied from here and took out that high, it doesn't mean anything. You still have the lower low. The only thing that could happen is a bear trend. How? You've already got the lower high potential. If you take out the low of today, Monday, and that number was 399.65, and you don't get back over, make an attempt to get over the 18-day average, you'd have lower highs, lower lows under the 18-day average, momentum pointing down. You could be headed into this area here, wherever that 373 and a fraction on the Bollinger Band. There's also a window envelope that'll come into play, and it's probably going to be closer to the 390 level. If you don't know what window envelopes are, you might want to take a look at my charting course. You know, in the morning I cover this in detail in my subscriber video, and I've been telling traders, just keep your eye on it. There's nothing there. I've been looking for platinum to hold the lower Bollinger Band. Now, is it going to develop an embedded reading? Both numbers, you cannot go on Tuesday's numbers. You got to go back to Monday. Both numbers under 20, not the day before. You're just oversold. Nothing to really do. Oversold hitting the lower Bollinger Band. The way I teach charting, that's where I think the pros take money off the table. They load their guns up and see on a big rally, can they sell it again? But I don't think you sell until you're either embedded or you correct that oversold condition. In the palladium market, you have a higher high, lower low, oversold market, plenty of resistance at the 100-day average and the 18. So you've got to be looking at that real hard and saying to yourself, whoa, that's a lot of resistance. We're sort of in an area here where you're stymied now at this band, the 18-day average down to the lower Bollinger Band, but not trending. What's weighing on this market? This market, the dollar index. Now, the dollar index is 3 days in a row over the upper Bollinger Band. The most it typically goes is 5 on a closing basis. I count each day that it's successively over the 18-day average. You see news announcers have that all the time. It does happen. Successively over that, each day it does it, it takes away 1 of the 5% of the time that the market stays over. It's also something else. It's a sign of strength. So it's excessive. The market's calling for a pullback to the right-hand side of that band. The trend is up. You're not embedded. So you have an overbought condition that is very bullish. The market has caught a whole group of people, everybody short under this whole band of time this year. For all of 2021 on the close today, it's a pretty broad statement from right here. They all have a losing position if they're holding on to their shorts because you finished up just about at the high of today. Got it? That's a lot of people that have guessed wrong in the market or traded wrong in the market. Our work took you out of the downtrend back here, but it was never a trendable trade. I kept saying this is not an easy trade. And I believe me, I'm like Swiss cheese. I got holes all over my body from wrong trades. This is one I wasn't wrong, but I wasn't right either. I just didn't see anything there to do for this whole period since you peaked out there, and it's kept me out of trouble, not because I thought, because I followed the chart action. So if you're like me and you look for vehicles like that and ideas, that's how I start you off in the morning. At approximately 5:30 to 5:40 each morning, I begin recording my charts for my subscribers. Now, it's not on YouTube. It's on our website. It's in an app that we give you. It's in our charting software. If you're a subscriber, everything's there. I cover short-term swing trades. A swing trade you can put on today and get out 3 weeks from now. You don't know when. And longer term, which are all based on the weekly charts. And I cover those in great detail either Friday night or Saturday mornings. And I mean, it's for the long-term trader. I really give them what they need there. In the morning, I'm bringing you into the news as what's happened in Asia, Europe, the U.S., what reports are coming out. And I cover all these sectors in this exact sequence each and every time. If you're on our website, when you pull your scroll bar, it lights up big and bold for you so you can get around. But even without that, anywhere that you're at, be it your iPhone, you know, hey, if Ira's doing stock indices first, currencies next, interest rates, you'll get the play real fast. How do you get this? Go to our website, www.iraepstein.com, under the word futures. It's really that simple. Try to get me first thing in the morning where you're bouncing your ideas off of what do I think those charts look like. Maybe it helps you, okay? I'm Ira. You have a good day. I will talk to you all tomorrow.